everyone. So last time I have projected that Apple will have a rebound back to around 244. So this was January 31st injury, and then we'll have another leg C going backward, potentially testing 195, and then eventually we'll hit the target on 285 on 271. So now I will look at the chart and let's review. I think Apple's still on the right track. So this is the weekly chart. As we projected, it has a ABC wave correction. Still, I'm seeing this is a correction. The bounce to 250, the lower end hit on 280. So it's pretty close, given that it was a prediction back in January 31st. I predict will come back 244, off by 6. I think that's actually pretty accurate. And because of a little bit here, the lower end I project on 195, but so far we haven't seen it on 195. It stopped, I would think it stopped at 208, and the reason being that is look at this bar closed on March 21st, Friday. I think this will be a very good stopping point for us to continue. So I'm gonna make this one maybe like 3-point wallet as a support. So previous I said it's 95, so we have still a bit range. There's like very small possibility they will go break this 211 and then hit 195. I would say that's less than 50% or even less than 10% possibility. I would say there is a good trade. It will be a swing day trade idea to buy Apple the coming Monday, and we can project that ABC wave correction finished and will towards a higher end. So and if we think about if that's a projection, last time I said well goes to 271 to 285. That's also valid as that's being a range, but this time we can also took this whole thing and look at it. I think again our range I can update it to 260 to 276, and the highest goes to 293, and 293 also collide with 297 for Fibonacci, 259 collide with 260 range, pretty much off by a few cents. So major resistance we are looking at 260, good beneficial target or take profit. We can think as 293 to 297 area, definitely before 300. I would unload some of my position. So yeah, so that's I remain the bullish trend on Apple, even though on swing trade we having the correction and the short-term moving average is above, but then my stop for that trade, the stop loss will be 211. So it's important to keep discipline and follow that. So let's quickly go back to look at the SPX. I think SPX stop at this 0.382 5510. I think that's like the maximum point we can imagine as a resistance. So this one, I would say SPX bottomed will hit resistance sooner than Apple. So currently, also SPX correction pretty straightforward. It's there's like barely any. There is like very little day trade opportunity on February 28th. That although that is a rare opportunity, but it's a good I would say, bounce back during the downward trend. So still I remain bullish for the future of the SPX, but that would being said, like we probably hit like the potential the end of this bar. That there's a good possibility that this is the end of this bull market, because the correction already hit on the wave 3 bull market since 2022. So given that, I may need to reconsider this here. So usually this bounce could go a little bit further, because that's I'm a little bit concerned actually from here. Even though the long term, much longer term, I think the SPX will go higher. Maybe the correction could take like 6 months or a year or 2 year maximum, and the maximum, the wave, we can, the most likely I'm thinking will be stop at 5132. So we still have like maybe 10% drop. That's about it. This will be a solid 20% drop as a correction or technical correction. But then I'm thinking 4807 will be a stronger resistance point. I do not want to see this even getting broken. So I will make this as even stronger, and this will be my orange line. Once this is broken, then I'm actually thinking liquidate all my positions. So this one will be yellow, a bit yellow, so that's the range I'm seeing right now ahead. But I think if you do a short here, it hit like 0.382. So we are in a tricky situation, but my will remain as bullish at the moment. But if it hit like 48, I would sell them all. So that's like I'm risking about 10% of the room of the price or value, and potentially have a higher gain, because looking back, I think this one 2021 December was the peak for this whole after COVID wave, and then we are getting so-called, this will be wave 1, wave 2, wave 3. We are in wave 4, and once the wave 4 complete, there will be a bigger wave 5, and that will let's say hit like potentially 7,000, 6,300 to 6,800, potentially 7,000 for SPX. That's my long-term view for this whole trend after COVID, and then we'll see the correction. Yeah, we'll stay tuned. Today's the next day, next weather, and I hope everyone's enjoying the spring weather. Yeah, well, see you. Bye.